Thank you, Michael. I'd like to first introduce myself again. My name is Tim Sardinia, and I'm a director with Millennium Funding. I'd also like to thank Mike Panamero and the TFI team for inviting me to participate in this opportunity. And certainly I want to congratulate you on your choice to participate as well. Something that needs to be said very early on is this. The role of the TFI is to train, guide, and support each and every one of you. And that can't happen without bringing in industry experts. TFI does not bring in professional trainers. They're not simply just instructors. Each of us are industry practitioners. We do this every day. And so the information that you're going to gain from me during this training series will be real. It'll be things that I have done over the past 15 years in this business. It'll be the lessons that I've learned and the hardships that I came upon in learning those lessons. I'll share with you my successes, and I'll certainly share with you the things that you shouldn't do. But prior to getting into this curriculum and getting into the subject matter, I'd like to give a brief introduction on myself. I started in the factoring industry in 1995. Back then, I didn't even know what factoring was. I was part of a company that was growing very quickly. We were in a cash flow problem, and we were looking for all the different types of financing, conventional financing options that most companies look at when they have a cash flow concern. Where we went to the banks, we went to friends, we went to family, we were missing payroll. I still remember the day that my boss walked into my office and he said, "Tim, you and your sales team have to stop selling. We simply can't keep up with the pace of selling. Our cash flow can't handle the growth." Well, at that time, I didn't know much about financing. I didn't understand how that could be a concern. How could we be doing so well and yet being told at that time to stop what we were doing? And so my boss sat me down and he educated me on this. You see, as we sold our products and services, we had to pay for those. We had to pay our suppliers. We had to pay our employees. We had to handle the growth. We grew outside the scope of our business and we had to increase the rent. All those things affected our cash flow. We went to banks, we went to friends, we went to family. We went to anybody that we thought we could get financing from, and we were unsuccessful. It's at that time that you make really tough choices. Do you pay your employees? Do you pay your suppliers? Do you pay your taxes? All real business issues, crucial issues that can affect a business in a number of ways. Well, it was at that time that we were introduced to factoring, and that moment changed my life. From that point on, I decided to get into the factoring business. You see, if it could work for my business, boy, it could work for a number of businesses. And it could work for businesses throughout the United States, throughout Canada, really throughout the world, because all businesses have cash flow concerns. 15 years later, my company is now managing over $200 million in accounts receivables. We have had a tremendous growth period. Now is the time, as Michael has mentioned, because banks are not financing. My business has grown over the past 15 years because of people just like you. Over 70% of my deal flow comes from people just like you. I am going to teach you in this series a number of different things. What we do, what you shouldn't do, what we've done, what we shouldn't have done. All of this is going to help you to become more successful in this business. But I do want to say this before closing this introduction. This is not a get-rich-quick scheme. You're going to have to work at this business. You're going to have to put some time and effort into it. There are things that you shouldn't do, and certainly, again, there are things that you should do. And we're going to help you make those right decisions. And part of the TFI, as mentioned earlier, is to make sure the support is there so that you will be successful. So with that said, let's move on to what factoring is. So what is factoring? Well, contrary to conventional financing, factoring is not a loan. Factors do not lend money. They buy assets, accounts receivables, at a discount. The pure definition of factoring is the purchase of business-to-business or business-to-government accounts receivables at a discount. Again, it's very important for us to emphasize that this is not lending money. And because it is not a loan, factors are allowed to look at things differently than conventional financing or banks look. You see, conventional banking looks at the strength of the borrower, where factoring takes a look at the strength of who the borrower, or the client in this case, who they are doing business with. It's a total paradigm shift in how people look at financing. Factoring fees, again, are based on a couple of things. the length of time that it takes for the invoices to get paid, the creditworthiness of the customers, can they pay their bills? And another thing that's very important is that a factoring fee or a discount fee is a business expense. It's not affecting the liability side of a balance sheet on a business because it is not a loan. Now, another great thing about the factoring business is that it's somewhat recession-proof. I get asked all the time, how are you doing in this economy? Well, certainly when banks are not lending money, we're doing very well. You see, small businesses are not just going to go out of business because the banks are saying no. These are creative entrepreneurial people. They'll do anything to survive. They need to find alternative financing options. So more and more we're seeing deal flow come in. Clients and industry experts and accountants and a number of different referral source type people are finding that factoring is becoming the alternative financing tool of choice. It is because of this that we have grown so significantly. And again, please understand that a cash flow concern is just not a local concern. We have been successful throughout the United States and Canada. There are over 55 million small to medium-sized businesses across North America. Less than 10% of these take advantage of a factoring product today. Even with that said, let's take a look at the growth of this industry. In 1998, statistics show that there were $78.6 billion worth of invoices factored. 2000, we bumped up to $95.1 billion. 2002, $95.7 billion. 2008, let's fast forward to 2008, we have $136 billion. And we don't even have the statistics yet, but I can tell you they're pretty significant. The whole reason why that's happening is because people are becoming more and more educated on the benefits of this. But even with that said, there is so much opportunity out there for you and I. We just have to figure out how to find these prospects, how to educate them, expose them on what we do, and how to educate them on the benefits. Now, what I'd like to do at this point is I'd like to go through a real-life case study. I think this will really define the benefits of factoring. I think it will bring you into a real-life situation and allow you to see how factoring can help businesses. Again, this is an actual client of mine. First of all, let me define the players in this transaction. I don't know if all of you are aware of the temporary staffing industry, but more and more businesses are outsourcing their employment to what we call temporary staffing companies. These are companies that actually hire the employees so a company doesn't have to, whether it be because of small project work or just simply because a company wants to outsource the whole human resource function to another company. Temporary staffing is growing very quickly as a tool of choice for businesses as far as employees are concerned. In this example, the temporary staffing company was a medical staffing company, more specific, nurses. The medical staffing company would hire the nurses, and then they would put these nurses into hospitals or nursing homes to work on a part-time or full-time basis. This business was a small business, but wanting to grow very quickly. One day they received a phone call from a major hospital in the Boston, Massachusetts area. After hanging up the phone call, the owner looked at his staff and said, "My gosh, we just received an order for 50 nurses." Everybody in the office started to cheer. There were high fives. I think there was even a champagne bottle that was opened. And after the cheering, the owner of the business went back to his office and started to take a look at the impact of this. You see, in order to employ the nurses, you have to pay for the nurses. Well, this hospital was fairly large in Boston, and they had a history of paying in over 60 days. So the owner decided to sit down and take a look at the cash flow involved with taking on this new project. And let me do the math for you. The nurses were going to be paid on average $24 an hour. The nurses were going to work 40 hours a week. They were going to work for 8 weeks before being paid anything. And there was going to be 50 nurses altogether. So if we do the math on that, we have $24 an hour, 50 nurses, 40 hours per week, no money getting paid for 8 weeks. That impact financially was $384,000. What that said is that this individual, this business owner, needed to come up with $384,000 in order to take on this contract. The other option was to look at the nurses and say, hey, listen, the good news is we can hire you and you're going to work for a major hospital in Boston. The bad news is we're not going to pay you for 60 days. Well, obviously that's not a solution that works. So just like every other business, this business owner decided to go to the bank and get a loan. Let me walk you through the office here. Remember, banks loan on assets. So if you take a look at the assets of this small business, as you walk into their office, you make a left, you see about 3 pictures of nurses. You make a right, you see a microwave oven. You go around the corner, there's 3 computers, 2 printers, and a phone system. Do you think the bank was going to loan $384,000 against those assets? The answer is obviously no. So at this point, what do you do as a small business? Where do you come up with $384,000? Well, the good news was that this client was introduced to factoring through an individual just like you. And this person talked to them about the fact that, listen, we don't care about your assets. We're buying your invoices at a discount. Literally the day or the week that you create those invoices, we will fund against those. So let me show you how factoring was a positive solution in this scenario. Remember, we were paying our nurses $24 an hour. However, that's not what we charged the hospital. If we did, we wouldn't make any money. So in this example, the nurses on average were being billed out at $36 an hour. So again, let's do the math. $36 an hour, there are 50 nurses working 40 hours a week, and over 8 weeks, that would amount to $576,000 in revenue. This was a solid transaction. There was not a lot of risk. We had a strong payer in the hospital, and we had easily verified invoices. The advance rate against these invoices is 90%. 90% of $576,000 is $518,400. There's also a 10% reserve balance. 10% of $576,000 is $57,600. That reserve balance is paid back to the client upon the payment of the invoices. Once the payment comes in, the factor takes out their discount fee and remits the balance of the reserves to the client. If we continue to do the math in this situation, the burden, or what we had to pay as far as payroll for the nurses, was $384,000. So as you can see when we do the math, that the advance rate of $518,400 was more than enough to cover not only the payroll, but also to provide additional working capital. Without factoring, the only alternative for this client at that point was going to be to call the hospital and say, I cannot take on that contract. And chances are they never would have received another call from that hospital. With factoring, not only can you take on this contract, but they are allowed to take on any contracts as long as they are doing business with creditworthy hospitals. A positive solution for all. So how do you fit into this equation? As I mentioned, that deal was brought to us by an individual just like you. Your job is simply, or your mission really, is simply to find a company like this company that has a cash flow concern, and then to introduce them to the concept of factoring, to expose them to this opportunity, and to educate them on the benefits. That's it. We then will take it from there. Once you've introduced them to us, we ask you to simply do what you do best. Go find more of those clients.